guys, how's everyone doing? My name is Ofente New Dube, and for anyone who has been on our channel, I'm pretty sure you all know who I am. This is all part of just formality's sake. But for those who are just new to our channel and just came across this video, I'm Ofente from FX Link. I'm a trader and currency coach at FX Link, along with my partner Mandlam Siwi, who will be on some of the other videos that will catch on our channel. If you're new, like I said, and just pumped onto this video, please hit the like button below if you like this video. And FX Link is a great platform, man. We release some really good content, and then hit the subscribe button below if you want to get more of our videos like this. So for 2019, thank you. So we just posted a new podcast as the channel called Our Traders Podcast, and we started with the great George Soros. It's a really great podcast, man. It has nothing to do with technical analysis. We just thought for 2019 we could try something a little bit different, just something that will build you as a trader. You know, just your mindset, not technical analysis. Not everything has to do with technical analysis, guys. You know, just something just to build your mindset, show it's possible, and just so where trading could really take you, how these people open their hedge funds and stuff like that. But to get to the meat of things, you know, without wasting any further time, so we're basically starting a new playlist that will replace the past playlist weekly setup. We started something called My Traders Journal. Okay, I would my trading journal. It's My Traders Journal, my trading journal. Not really much of a difference there. So, why did we call it our trading journal? I have no freaking idea. It just sounded good, like trading journal. You know, a journal is where you record everything that you do, and basically what we will be doing on this playlist is we'll be recording a lot of things that we do on our day-to-day trading. So I think that's why we decided to call it our trading journal. Okay, now what will this trading journal consist of or do? And it's different from other things. Number one, the first thing that will be happening on this trading journal is we'll be sharing our weekly setups. Like I said, this will replace our weekly preparation playlist. We'll be showing our setup, doing technical analysis, pairs that we're looking at, and all the things that you liked for you to be able to subscribe to our channel, because this is the only thing that we were doing. So we'll still be continuing with our weekly preparation. We'll just be calling it or putting it in the playlist of our traders channel. Now, during the week, more setups will be posted on our social media pages. I mean, guys, think about it. If it's during the week, because we only post our videos on Sundays on YouTube, think about it. If it's a weekday and I'm just on my laptop and the setup pops up, you know, think about it. If I have to start making a video, recording it, editing it, putting all the other things, posting it to YouTube, by the time it gets to you, I might be hitting my second take profit. You know, so it takes time, man. So the best thing we could do, and we decided to do, is that most setups that pop up on our radar screen, we'll be taking screenshots and posting them as pictures on our social media platforms. Social media platforms, there's Instagram, there's Facebook. We've started with Twitter, and yeah, that's our social media pages. So whenever I see an opportunity during the week, I'll just take a quick screenshot and post it on social media. So make sure that you follow us on social media, because this will come very handy. Lastly, before every forecast, we'll give out an update on prior trades. If you can look on our channel, there's a part that says weekly reviews. We had a weekly review where we just went back and studied some past trades that we gave out analysis on what happened, stuff like that, and we cannot just discontinue with doing it. So we decided to bring it back because a lot of people found it very insightful. So what we will be doing instead is just give a quick 2 to 3 minutes of past trade, what happened before we start our weekly setup, just to give an update on what happened on the trade, what went wrong, is there something to learn from, just a quick lesson about it. The second thing that we'll be touching on, we will be showing you our live account. Now, whatever trades that we'll be showing you, this will be trades that we will be taking on our live account. So basically, this traders channel only consists of our live accounts. So this will be something very, very exciting. The main thing of our traders channel is basically, if would call the name of our company or our traders channel, the slogan would be how to grow a small account. That's basically the whole motto behind our traders channel. As I go through YouTube, I see a lot of people who will say how to grow your $5,000 account, how to grow your $10,000 account, how to grow your $50,000 account to $100,000 account. But I've never really met someone or came across a channel that said how to grow your $100 account. Because let's be honest, it's not everyone who has $5,000 in that case to start trading. Some of us then don't have that amount of money. So as we come across these YouTube channels, YouTube people who want to grow us large amounts of money, once telling us to start with a large amount of capital, that could be very discouraging. We will be showing you how to grow a small account, $100 account. This will consist of a slow and small growth. Guys, this is not a get rich quick scheme. Now these are the keywords. This will consist of a slow and small. Think about it, this is $100 account. If you're trading $100 account, this will be a really slow progress. And it will be a small progress. You cannot expect, think about it, guys. And then again, trading is not a hobby. For anyone who's doing trading as a hobby, wants to do it part-time, do photography instead, guys. Just go and do painting. Just go and draw. That's a hobby, not trading. You cannot expect to do trading as a hobby and be successful. It's slow and then it's a lot of work. Trading is not a freaking hobby. And for anyone who's taking trading as a hobby, I don't know. I don't have all the answers. I won't say it's impossible because I don't know all the answers. But if I'd give you my advice for anyone who wants to do trading and anyone who wants a hobby, just go take the money, go and get yourself a Canon camera, man, or a whiteboard or something, something that you will see where your money goes. Because if you're not careful in trading, it will blow your account, man. You will think this is a scam. That's why most people who don't really understand what goes in Forex claim that Forex is a scam, because they wanted a quick and fast growth. And when that doesn't happen, they kind of resort to the last option that, scam. We've been scammed. No, you haven't been scammed, man. You lost. You just want to focus. You didn't take time to learn the game, to learn the trades of the game, and put in the time to learn the game. So when we grow the account from $100 to $10,000 in 6 months, what do you think? You think we're that good? What do you think? But here's my answer. Hell freaking no. I'm not God. I don't know. We're not here to perform miracles. If you're expecting to go from $100 to $10,000 in 6 months, guys, please exit this video now, because I'm sorry, you're just wasting your data. I cannot do it. I don't know anyone who can. And if anyone promised you to do that, it's probably a scam. But I don't know. I'm just saying. This is my opinion. But what I'm saying to you is, hell freaking no. I don't know of anyone who can grow from $100 to $10,000. This sounds like a get rich quick scheme. And like I said, if you're looking for that, please exit this video to save me time and to save yourself time. I don't want to waste your time and say, hey guys, hang on, are we going? No, I won't do that. I cannot do that. Not won't I do that. I cannot. It's impossible. Okay, I won't say it's impossible. I'm just saying, hey, out of 100, the chances are 0.01. But what we can expect is $100 to $300 in 6 to 10 months. I'm not saying that I'm going to grow the account from $100 to 10. So don't hold me liable at the end of just 10 months. Hey, Fancy, you told us you're going to grow the account to 300. No, I'm not saying that. Can we go less than 300? Yes, it's possible. Can you do more than 300? It's also possible. Can you take it to $500? Yeah, it's possible, but gotta be realistic. It's better to under promise and over deliver. That's one of my theses. It's possible. Now, someone is thinking that that's small. I won't say the word, but someone out there is like, hey, that's fucking small, man. I cannot do that. You wasting my time, offense. You wasting my time, dude. And if you look at it in that perspective, if you look into buy a Ferrari, a yacht, a villa of $300, you're right, that is fucking small. Shit, I said the word. It's fucking small. But yeah, it is fucking small. And if you're looking at it in that perspective, then I'm sorry, but I don't think trading is for you, or investing in general is for you. Because there's one thing that you don't really realize. From $100 to $300, there is a fucking return of 200%. No bank will give you a return of 200% in 1 year. No hedge fund will give you a return of 200%. I don't know if any investment vehicle will give you a return of 200%. Except from trading itself. And especially if you're trading a small account. Small account is fast. Like the return gets compounded too quickly, but it's kind of slow. In a large account, it's kind of the opposite. But in a year, it's possible that we can take this $100 to $300. And you've made a return of 200%. Think about it. You've doubled your account. Not only doubled, you doubled your account. Like, if we manage to make this return by the end of 12, man, we are great. We are so fucking great. If you manage to give you this 200% return, and for anyone who's not satisfied with that, like I said, trading is not for you because you're losing the big picture. If you're looking at it in monetary terms only, then you don't understand the whole concept of trading. Let me tell you something. Professional traders and hedge fund managers are good with making 30% a year return on their accounts. 30%. A bank can give you 3% interest on some of your investments in a single year. Now, making 200%, that's beyond, and that's super extraordinary, and that is really, really exceptional for someone who's just starting trading. You shouldn't even clap for it. Like, you should go celebrate by the end of the year if you're able to make this. Now, if you want to think about it in monetary terms, think about it. If you're able to make $100 to $200, that's a return of 200%. That's the same as growing 1 million to 3 million. Wow. Now some of you can have just saw some light. It's the same return. If you can go $100 to $300 consistently, meaning it'll also be possible for you to go 1 million to 3 million. It's the same thing. It's 200%. It's just they have two different amount of accounts. Is the psychology different? Of course. Trading $1 million and trading $100, the psychology is way different, but the concept is kind of the same, And another thing, is it possible that we end the year on a negative side? What do you think, guys? Do you think I'm that bad that I can end the year on a negative side from $100 to $50 to even? Do you think I might even blow my account? Yep, it's possible. I might even blow the account. Like, how like this is trading, guys. Nothing is guaranteed. And as you can see, I did it with a green, like it's nothing bad. It's just a learning curve. If you follow your system quite well, you were disciplined and you blow accounts, it's nothing wrong. It just means that you need to go back to the drawing board and work from the start. But it will be a good thing to blow $100 account. That's why I don't really encourage a lot of new beginners to put in a lot of money when they're starting to trade. Because if you invest 1,000 or 5,000, you blow 5,000, wow, they can really fuck up your mind, your psychology. Well, the $100 doesn't really have that much effect on your psychology. Like I said, it's possible that I can blow my account. Some of the best hedge funds end the year on a negative account, but that's not the point. If you're fixated or making money, that I don't really know, but that's not the whole concept of trading. This is our main thesis, or our main focus on this account. It's to help you learn how not to blow your small account super fast. Man, a lot of people blow $100 in a day, in 2 days, in a month. We want to show you how not to blow your small account too quickly. We want to help you grow it steadily. If you have losses, be able to control the bleeding, the losses. Don't have super losses and blow your account too quickly. So, the disadvantages of trading a small account. So we're kind of running out of time, so I'm just going to run through the slides too quickly. With a small account, you have tight stops. You'll be forced to trade lower time frames, trade 0.01 lots straightly. Money management is not flexible, and you need to monitor trades vigilantly and consistently. You need to stay on the screen because you might blow your account any time if you're not really focused and if you don't track. And for those who don't put stop losses, man, $100 in the blink of an eye, especially in a volatile day when there's an NFP, some kind of fundamentals that really have large swings in the market. If you didn't put a stop loss and you only have $100 account, it only takes 100 pips to blow your account. Think about it. So the last part on our trader's journey is that we're going to focus on money and risk management. Like, this is the most important part of what this whole trader's journal. Like I said, our main goal is to help you not to blow your $100 account too fast. Our main goal is to help you have a slow, steady, and a consistent growth on this account. So the main focus will be on money and risk management. Okay, we don't risk more than 2 to 3% in a single trade. If you have $100, risking $5 on one trade is kind of too much, man. Because think about it. If you risk $5 on $100 trade, let's say hypothetically, you just decide, okay, for each and every trade, I'm gonna risk $5. Let's just, for argument's sake, say it's fixed. And let's just say you you lose trade after trade. Yeah? 5 divided by 100, that's 20. That means you're going to need to lose 20 times for you to blow your account. And if you have 5 losses, then you'll be over 25% of your account. So your account will deplete too quickly. So we want to control the bleeding. We don't want to risk more than 2-3%. Actually, 3% is a lot. Our main goal is not to risk more than 2%. Because think about it. If I have $100 and I'm only going to risk 2%, I'll need to lose 50 times straight. One trade after the other, lose after another, 50 times for me to blow my account. Now, is it possible for me to lose 50 trades in a row? Less likely. I don't think I can lose 50 trades in a row. So that's why I need to have a risk that you willing to cap on a single trade. But that's how all the things we're going to elaborate further on as we start our traders journal. Yeah. Number 2, we're going to have a maximum allowable risks per week. We'll be showing you how much you're willing to risk for the whole week. We need to cap it. I don't want to blow my account in a week. If I reach a certain point and I've been losing for that week, I'll stop my trading. I'll stop for that week. Just go and get my mind right. Read a couple of books, go back to my back testing, see what's wrong, study my past trades, and I'll stop trading for that week, and I'll come back the other week, hopefully with a more calm approach to the market. How much will that be? Stay tuned. I'll tell you as the week goes on. Okay. Number 3. After 12% of straight losses, we apply risk management. If I lose 12% straight, that will mean if I risk 2%, I'll need to lose 6 trades, one after the other. If I do so, meaning we decrease the amount of money that we'll be risking. How will we do that? Again, stay tuned. We'll be showing you all this plus more. This will mean that we want to help you control the bleeding on your account. Number 4, after reaching a return of 21% of our capital, we compound. Ever heard of compounding in trading? If not, just have a quick Google and I'll explain it to you. And again, these are some of the things we'll be touching on our traders journal. Now, I cannot give you everything today, man. Like, what will be the use of you coming back to watch our traders journal? I just need to give you a little bit to get you excited to know what's gonna come up ahead. Last but not least on our slide, after every 3 months, we will be tracking the progress of both accounts. So after every 3 months, we'll be taking a graph showing you are we in a positive, are we in a negative, what's the overall thoughts. I'll show you a bit of psychology that goes in. And yeah, man, that's about it. That's basically an overview what our traders journal will consist of. 3 things, and guys, really hope you will really enjoy this traders journal. And yeah, so without wasting any much more time, I was just giving an overview, like I say. So for now, let's kick off this traders journal and get straight to the charts. Like I said, let's kick it. Hey guys, welcome to the second part of the video, and of course we'll be commencing our traders journal. And the pair that I'll be going through today is the pound Canadian. Now, for anyone who's just new to our channel and just came across this video, here at FXLink we're using a simple approach to the market called the triple screening. It's quite a simple approach, but basically what we do is use 3 different types of time frames to analyze the market. Now, you can either choose the daily, the 4-hour, or the 1 hour. Or you could start with the 4-hour, 1 hour, till the 50 minutes. It all depends on your preference, né? As we start analysis, from this level of structure, you can see price action gave us a push to the upside, a bit of a relief, and we continued up. Now up until this point, price action was in a visible and solid uptrend. Anyone at this point of time would have been looking for a sudden opportunity, but this was all good up until we had a bit of a consolidation. At this point, this is where price action came in, finally violated this consolidation, gave us a break below, close below, a bit of a small relief, not really visible in the 4 hour, and this is where we continue to the downside. And this is where now everyone can see this massive selling in the pound Canadian. Of course, this past week price action pound was very weak across all the major pairs. Came off very weak towards the end of the week, plus the Canadian being very strong across most of all the other pairs. And imagine the pound being weak and the Canadian being very strong. This will of course create a really aggressive move on this pair in specific. Now of course, if you're looking to sell this market, this will be the most appropriate time to sell from this level of structure, but not everybody gets to get in the market at that time. We had a bit of a relief, past support becoming future resistance. This is where all the major smart traders came in to join the move, to join in the sell, and of course price action just has been giving us a push to the downside. Now the question is, if many people had their entry somewhere at this level of structure, meaning they've sold the pound Canadian, no, where do you think these people are most likely to want to take their profits? Think about it. If you were selling this part, would you want to take your profits here, or somewhere here, or back at this level of structure? Of course, many people will be looking to take their profits back at this retest of structure, because this is a major level. And if they are past waiting to come into the market, where do you think they'll have their orders at? Again, this is where they have their orders. This is where you have the counter trend traders having their orders patiently at this level of structure. Now this is a key level that I'll be looking at. This is a level that I'd want to be vigilant if I'll be looking for a buying opportunity. Now if you could try to we can see that this is a very interesting level. We had resistance, we had more resistance, and at this level, this is where we currently have support. Okay, so this is also a very significant structure level as we look left. Now my overall bias on this pair is to look for a buying opportunity, so I'll wait for this. I'm expecting price action to at least come back to this level of structure, and this is where I'll be looking for a buying opportunity. Now don't get me wrong, as soon as if ever do get valid signals to enter this buying opportunity, I won't be looking to ride this trade way back up to this level of structure, because I do believe the price action still has the potential to go to the downside. All I'll be looking for is a short relief, maybe somewhere back to this level of structure, before sellers come in and break below, close below, because the market moves in waves. So I'll be looking just to get in the small short relief in the market. So coming into the hourly chart, our concern as this move, the one that gave us a big below, close below from our consolidation, we see that from that point, this is where sellers started to come in aggressively. So we want to know where are they most likely to slow down. You can see they are coming in very aggressively. We want to understand where are they looking to slow down. Of course, we see that there's a level of structure back at this level of point, but can you take a trade just based on a simple structure level? Well, some do, but I'm not really looking to bet my money just on one thing. That's why I like to use a confluence of things to see. Now you can see that this price broke from this level of structure, kept going, wasn't really much of a pause, but we had a significant pause at this level. Let me try to draw out this. So we had a significant pause. Yeah? So you could safely say sellers started really having a bit of a slowdown at this level of structure. Now why am I outlining this? Because I want to pull my extension to and say that since the sellers came in aggressively from this point and up until where they gave us a pause, I made an extension tool, and as we drag it up and as we come up, we want to see key levels that we expect this price to terminate. Now take a closer look. We have a 121, we have a 1414, and we have a 1618. We have a 1618 back to where we have structure level. Now as you can see, slowly but surely we're strengthening our case for entry. Now another thing that I forgot to mention on the 4 hour is this. If we could pull our retracement tool, Fibonacci retracement, and this whole move started right here from A. As we go up, just look where 1618 comes in. Look at it. Look at where it comes in. Bam. This is where we have a 1618. Back at our level of structure, we have a major 1618 retracement tool. We have a major 618 extension tool. Plus we have a significant structure level. I'm satisfied with that level. I know that this is where I'll definitely be looking to enter. Now this way we go down to our 15 minutes, our execution time frame. Now this is our execution time frame. Okay. So what I want to do this. We know that we have. Now there's something else that I see. I could pull this. My trend line from A to B. Now from here we'll be using an equal measured move, and from B to D. We have another confluence at this level of structure. So if everything goes the way we expect it to, this is how this trade will look like. Our entry will be a determination of a ABCD pattern. I usually take this ones aggressively. Stop loss will just have to be a few pips below our zone, and somewhere at this point will be a safe point, and we're looking for an overall take profit back to this retest of structure. Now of course this looks too aggressive. If you're looking for extended targets, then you could shoot for the retest of the structure, but if you want to be more conservative, the first take profit, you might even want to leave it and just up to this level. And as you can see, for having a risk of about 20 pips, you're looking at a potential take profit of 75 pips. Like I said, if you're looking for extended targets, this way you might be more aggressive and wait for it to retest this level of structure.